Afternoon, there could be more relief for consumers on the cards. The Reserve Bank's Monetary Policy Committee is meeting later this week. The central bank has already cut its lending rate by 225 basis points so far this year. It could do so again this week. Let's begin the bulletin as we're joined live by the Efficient Group's chief economist, Dawie Roodt. Good afternoon to you. Some analysts suggesting another 50 basis points cut. What are you forecasting?
Jeremy, good afternoon. Yes, I think that the Reserve Bank can cut between 50 and 100 basis points. I think they're going to go for 75 basis points, and that could be not the last one. We may see even more. But my estimate is for 75 basis points, but 50 basis points certainly is a consensus view.
How is this going to help consumers?
Not really that much. The reality is that the Reserve Bank has really gone out of their way to try to support the economy. They've reduced short-term interest rates. They've even participated in the secondary market, on the capital market. They made some amendments to various requirements for the bank's capital requirements and liquidity requirements. But the reality is that in this kind of environment, monetary policy is not that powerful to support the economy. And also keep in mind, whenever you cut interest rates, there are somebody that are dependent on interest income that's not going to get that income.
So to your point then, how much more intervention can there actually be, and to what purpose, in the absence, I guess, of bigger economic reforms?
Yes, well, interest rates currently at 4.25%. That's on a repo rate. So technically, the Reserve Bank can cut that back to 0% if they want to. I don't think we're going to do that. Some interest rates, some central banks in the world actually do that. But I think from now on that the Reserve Bank will try to different kind of approach. I think I will not be surprised if the Reserve Bank participate more in the secondary market, on the capital market. We know last month, for instance, that they bought 11 billion rands worth of government bonds. So we could see more action there. I think the reality just is that the problem with monetary policy is that you can stop people to borrow money, but you cannot encourage people to borrow money if they simply do not have confidence. And I think that's the issue. Monetary policy can go this far and not much further.
Dawie Roodt, it's no secret that the longer the government extends the lockdown, the worse the impact is going to be on the economy and jobs. Treasury's worst-case scenario, and you've seen it, projecting a 16.1% contraction, as many as 7 million people losing their jobs. Are we at, or are we about to reach now, some sort of tipping point on day 53 of this lockdown?
I think we passed that tipping point, Jeremy. There's a lot of research out there suggesting that people can, hold out or last for, say, 4 weeks or a little bit more. Then they literally run out of savings and literally running out of food in many instances. So I think we passed that. And this pandemic is not going to stop. People are simply going to start ignoring it. And I think people are going to start trying to return back to work. And I think the sooner we officially stop this lockdown, the better. My estimates concur with that of Treasury. In fact, my estimates are slightly worse, that we're probably going to see an economic contraction of 10% or much, much worse. And the fiscal accounts, already in deep trouble before the time, is going to become totally unsustainable. So I'm afraid we are in very, very deep trouble. The sooner we get this economy back to work, the better.
Dawie Roodt from the Efficient Group, thank you. I want to take you to the ENCA Money Desk now. Devin Murrigan in front of our newsroom camera. Devin, we're talking about this interest rate cut, which I guess has been factored in at this point. What's the market response to this so far?
Well, at this point in time, I think
all right, so Devin Murrigan, we'll get back to you a little bit later on. A few technical difficulties, but essentially expect another interest rate cut this week. That is the broad view of economists who say the Reserve Bank has space to deliver even more relief to consumers, as economist Dawie Roodt was saying. So a half a percentage point cut will bring the repo rate to a record low of 3.75%. This would make it the fourth cut the bank has made so far this year, with the economy virtually stalling under lockdown.